Good morning. Today's 9/12/2016. Just going to do a quick little recap while the kids are quiet right now. So let's get into it. This is oil. We're looking at the commodities market in oil. We're future traders. Um, and this is September 12th, 2016. And as you can see, we've been in a downtrend from this day to here. Looks like we started making this downtrend on 9/8 to 9/11. So we've been making a series of descending bars. And here we see an engulfing candle. This was the end of this trend here. And ever since then, we've been making descending bars, going lower and lower and lower. And the expectation is, well, we're trend traders, so the expectation is if we're trend trading down, we're going to continue to go down. And right now we are in a high probability reversal area. You can see here, this was a retracement and then a continuation of a previous trend. And I just drew an arrow pointing out the trend. We made a measured move where you have a move and then a retracement and a measured move. And now this was the reversal of this move, what we call an engulfing candle, where a candle is engulfed by opposing candle. And we've been making a series of lower lows on the 4-hour chart. And our theory is that the next 4-hour bar will be a lower low, be a descending bar. So we got to find a way to get in on a retracement inside one of these bars to continue to go down. So I just put this bar in green to highlight the fact that this is a demand zone, high probability of reversal here. So when we enter on a down trending move with this trend, we want to be on the defensive because this is most like a high probability of reversal in this area. Let's go down to the 15-minute chart and show you what's going on there. Okay, we're on the 15-minute chart, and as you can see, we are in a downtrend. We're below the 100 moving average. We're below the, this is the 100 moving average. We're below the 50 moving average, and we've just broken through a few major levels. This is previous close. This is previous lower day. And you can see on this retracement back to this zone here, we continued the downtrending trend. So this is we're inside of an impulse wave right now, continuing the down move. We are below previous close, which is a hint that most likely the day will close lower. We're below previous lower day, so most likely we will continue this downtrend. And we are right up on our demand zone here that we just pointed out on the higher time frame. So remember, our goal as trend traders, we are primarily trend traders or swing traders. The goal is to enter on these ends of the retracements and enter at the beginning of a impulse wave. And here I'm just pointing out some retracements. Retracement, and then here we see a impulse wave, a retracement, an impulse wave, retracement, impulse wave, retracement, and an impulse wave. So usually the ends of these retracements are at a significant level, a support level, resistance level. They might be to previous close, such as this one, and or this one, which retrace back to previous lower day level. Okay, we're going to look at this on the 1 minute time frame. I'm going to wrap it up early today and see what's happening. All right, so currently we're looking at the 1 minute time frame. I'm pointing out previous close, previous lower day, and this demand zone. And as you can see, we made a double bottom from the demand zone. Remember, this is a high probability reversal area. So at these reversal areas, you want to, in order to see a reversal, first you have to see a pattern like this, but more importantly, you want to start seeing breakdowns of key levels like S1 or the 100 moving average or the 200 moving average. We have previous low up here, previous close. So when you start seeing those levels consistently being broken, consecutively being broken, that's telling you that you are reversing. The trend is reversing. These levels are no longer acting as resistance. They are becoming support levels. So when you see a retest to say S1 and then a key reversal or a retest of the 200 moving average, then the trend is starting to reverse. And here what I'm showing you is that this is what we'll see if this trend starts reversing. You'll see the S1 broken, then retested, 200 retested, the previous lower day level broken and then retested, or the previous close level will be broken and then retested, and the trend will continue upward. So in the case of a reversal, you would be looking to get in on the retest of this continuation trend. Okay, so what you see here is that the price is below the 200 moving average. It's been bouncing off the 200 period moving average and making impulse waves and reaction waves back to this 200 period moving average. I thought this was a great entry because this is the end of an impulse wave. I'm sorry, this is the end of a reaction wave. I saw an engulfing candle at previous lower day below the 200 period moving average. That's consistent with the direction of the trend. And so my profit on this is currently $140. So this was my entry, and I'm trying to break through this demand level. What I want to show you here, the reason why I blew that up is to show you that this candle was the end of this trend. This candle was the end of this trend. You see how this red candle engulfs this green candle. That's called an engulfing candle. We just put a box around that and you can see how I entered into this trade. So that's a signal of reversal. And that's when you want to consider getting into the move of that, the impulse of that trade. And my stop is right behind this impulse, this engulfing candle. And you can follow that on the 200. You could say, I'm going to move my stop to the 200 period moving average. Right now, the 200 period moving average is at 44.97. You could move it there. You could follow the trend on that like that.